The Bank of England is expected to raise interest rates by the most since 1995 today, even as the risk of a recession mounts in an attempt to stop a surge in inflation from becoming embedded in Britain's economy. Most investors and economists predict the BOE will increase its benchmark rates by half a percentage point to 1.75%, its highest level since late 2008 at the start of the global financial crisis, when it announces its decision later today. A European Central Bank survey shows that consumers in the Eurozone are bracing for the economy to shrink and for high inflation to continue eating into their income in the next year. The Consumer Expectations Survey, used by policymakers for input in their deliberations and published on Thursday for the first time, showed households are beginning to lose faith in the ECB's ability to bring inflation back down to its 2% goal. Foreign investors have continued to cut holdings in Chinese bonds in July and dump equities for the first time in 4 months, according to a report by the Institute of International Finance. Emerging markets posted a 5th straight month of portfolio outflows, setting the longest of such a streak, according to records going back to 2005, as global recession risk, inflation, and a strong dollar drew away cash. The Panama Canal has seen a 30% fall in the traffic of vessels carrying liquefied natural gas, driven by Asia's weak demand for U.S. LNG and limited exports from the U.S. Gulf Coast since a terminal explosion in June. The second largest U.S. exporter, Freeport LNG's Texas plant, is still shut since the explosion, and its partial restart is not scheduled until October, curtailing the U.S. export capacity, even amid buoyant demand in Europe. And now some rumors and rumblings in Nigeria's banking sector have led many to question the state of the industry. That's our next topic of discussion after the break. Between 2014 and 2016, Nigeria's banking sector went through a crisis. The country's currency was devalued as reduced earnings from oil production due to low oil prices curbed the central bank's ability to prop up the Nigerian naira. Banks with dollar liabilities suffered, as well as those who had given out lots of loans to companies in the oil and gas sector. A reduced oil price meant that several of these loans went bad, and some banks found themselves going under. Nigeria's central bank intervened to save the banks, like Sky Bank, for example, pumping in about 800 billion naira. It was a move that led the bank to change its name to Polaris Bank. This is what it's known as today. Now, since 2018, the asset management company of Nigeria, AMCON, has been trying to sell the bank, and now there are reports that a sale may be completed in the near future. With similar macroeconomic headwinds facing Nigeria's banking industry today, Mukhtar Mohammed, the CEO of Astra Dynamic Solutions, joins me to discuss the health of Nigeria's banking sector. Mukhtar, welcome to the show again. Thank you so much for joining me.
Thank you, Tolu. Always a pleasure.
Thanks. So we can remember the situation between 2014 and 2016, leading to what people describe as a banking crisis. And we see some of those same conditions in play as it is now. Maybe not the necessarily high oil prices, but we can see the struggle that the industry and the economy globally is facing. So how are Nigerian banks doing?
Tolu, thank you. Good morning again. If you look at the indices, and when you look at the indices of the Nigerian bank, you want to look at what the CBN is telling us, or the audited result that have come from the Nigerian bank, and looking at the Nigerian bank holistically by their pair in Africa, you will see Nigerian bank have done really well. If you look at our expansion, we are almost every corner of Africa. You look at our acquisition scheme, we've been there after the 2008. I think Nigerian bank have withstood a lot of resilience in terms of microeconomy, fiscal policies, and it has not been bad years for the Nigerian shareholders, because if you go through that, you realize, especially the tier one banks, they have not faltered in paying of dividend for the past 10 to 15 years. So I think when you look at that, then you look at the liquidity level of the Nigerian bank, you are excited about the Nigerian bank saying that, oh, we've moved past the crisis level. But then, like you said, we go with a lot of things that has to do with things that are beyond our control, like what we are facing now, the pandemic, and also the volatile nature of our exchange rate, which is the major issue confronting the Nigerian bank.
Okay, so let's expand on those issues. You've talked about the exchange rates and, of course, some of the economic things outside. But particularly for Nigerian banks, people have cited things like a sluggish economy, a challenging operating environment, even increased competitive intensity, as well as the ongoing pandemic, as some of the issues that they face. Do you agree that these are really issues, or they're more time-bound in sort of where the economy and the industry is at this point in time?
So surprisingly, when you look at the economy of the bank and the GDP growth of Nigeria, it seems that the banks are growing faster than the economy, and that is the shock everybody have been. But again, it's a consuming sector. It touches it's one of the biggest consumer sector. What I mean, it touches every vice of Nigerian. Every Nigerian, the bank has gone innovative. They try to attract more customers. So in terms of you looking at the Nigerian bank by the economy, with the way the economy has performed, especially in the past 7 years, towards the end of the other administration, and towards the end, we call it like 8 years, you see that the Nigerian banks have done very, very well. And when people begin to complain about, oh, does that relate to the economy? Then you need to know that when there is a gradual recovery or there is going to be a recovery, it starts from the financial sectors, and the bigger player in the financial sectors will lead those recoveries. So that's what we normally see. That's why people will say, oh, is the Nigerian bank bigger than the Nigerian economy? The way it stands now, Nigerian banks are really resilient because they are now beginning to form in holding structures, holding companies. They are beginning to acquire banks in Kenya, in Ghana, in South Africa, begin to spread up in financial hub like in United Kingdom, in New York, in Paris. So these are highly regulated environment, and they are able to stamp their branches there. So you should give it to them. I don't think there's any. I think that's the only good thing that we've seen in the Nigerian economy for the past 8 years. The innovative nature of the Nigerian banks, by and by the competitive nature of the global economy.
And so even with this progress and sort of the maybe not necessarily rosy picture, but the good picture that you're painting, there is also one aspect that many people have flagged when it comes to Nigeria's banking sector and particularly banks, and that's this non-performing loan ratio. It's one of the things that got our banks in trouble before now, and some have said that we need to keep an eye on it. So right now, the non-performing loan ratio in Nigeria's banking sector stands at 5.31%, and that's a little, just very little over the benchmark of 5%. So even if it's just a little over the benchmark, it does cross what the CBN has set and the industry sets as being, the place where they're comfortable. Do we need to be concerned with the 5.31% ratio for non-performing loans? And why do we have an issue with bad loans in Nigeria's banking sector?
Well, non-performing loan has been an issue in Nigerian banks, and I think it's still an issue, especially now with the hike in interest rate. When those numbers begin to come in, especially the third and fourth quarter, we might begin to see those issues of non-performing loans. But we need to look at the history of non-performing loans and from where they are coming from. And the average price of it, the average of the non-performing loans are just what you just said, and most of these non-performing loans bank are in the tier 2 banks. The only tier 1 bank that have a high non-performing loan is First Bank, and if you look at, they were coming from a non-performing loan of about 20-something%, and now they've gotten as 5%. So you need to give them credit. Now, why do we have this long performing loan in an economy that is top of fund, in an economy that the earning capability of the consumers keep going down? So wherever you give to the businesses, sometimes their projection is they're not able to meet their projection. And that's why I think that we need to watch this space, especially with the way we've seen the volatility in the exchange rate. We could see those non-performing loans goes a little bit up. But again, when you look at the liquidity ratio of the Nigerian bank by and by the non-performing loan, there's no cause for alarm.
Okay. So we haven't seen a bank failure in a while. It's been more about mergers and acquisitions, but there is an entity which does step in at a point in time when a financial institution goes under, and that's the Nigeria Deposit Insurance Corporation. And since its establishment in 1988, it has stepped in. It helped consumers or financial institutions retrieve their funds 425 times. That's 51 interventions for deposit money banks. 325 of those were microfinance banks, and 51 were primary mortgage banks. In the current situation now, do you expect to see any failures at all? And we'll get into the particular one that's causing some controversy and some rumbling right now.
If you look at, like I said, if you look at the results and you look at the liquidity ratio, you look at the regulatory authority, especially the CBN, and you must know that the Nigerian banking sector is highly regulated. And I don't think we have cause for worry. Even when you look at some of the banks, you look at even the tier 2 banks, you look at their performance, you look at where they were before and where they are going to by their result thus far. I don't think there's so much concern unless there is something that they are not telling us. But when you look at the numbers, you don't have too much cause for concern, because again, you look at, like I was talking about, First Bank coming from a non-performing ratio of 22% and now as low as 5%. Then you need to know that sometimes these non-performing loans are the main issues, and once the bank are able to address it, it doesn't become so much of an issue, especially when you have liquidity. I think the problem is once the bank begin to be starved of liquidity and banks are not able to meet customers' demand, then there is cause for concern. Because now I need to get it clear: the Nigerian Deposit Insurance Corporation is only concerned about customers. It's only concerned about the bank's customers. It's not concerned about the investors in the bank or every other person that transacts business with the bank. So if you look at by and by the liquidity, like I said, by and by that they are able to meet customers' demand, we've not seen any systematic shock in the system thus far. I think if the regulators are on top of their game and they are telling us the truth, I think we are fine.
All right, so let's go to Polaris Bank right now, formerly known as Sky Bank. And there are some rumblings that the bank may be sold soon. The how, the when, the who, and the why are different things. But this is a bank that the CBN rescued, some say around about 800 billion, and total cost to taxpayers was about 1.2 trillion. What's the state of the bank? What's the financial health of Polaris right now? What's the situation?
And if you look at the last audited report of Polaris, we saw that Polaris has come out of the wood. So even if the profit is not much, there seems to be making profit. But again, when you look at that profit via the intervention that through the AMCON, then you have cause for concern. But then the bank seems to be in a profitable level at the moment, especially with the current management of the bank doing a lot of work in re-engineering the bank, repositioning the bank for the whoever investors is coming to buy those banks. I don't think the bank is that bad now. I think the bank are able to meet up the obligation. They've not been one of the banks that are always in the CBN windows to get liquidity. So I think if you look at that, you say that it's not as bad as being painted. From where they are coming from, like I keep saying, I think they are better managed now, and they have moved from wood to a profitable level based on their last results.
Okay, so given the fact that AMCON took over the bank, sort of making it a nationalized banking situation, if you were at a point in time where such a bank found itself back on the proverbial chopping block, what is the process? What's really in the best interest of the industry, the shareholders, and even the customers? How would things be handled for a Polaris Bank if it found itself back in a situation where maybe it did need to be sold?
I think what we need to see openness. We need to see government being very open in the process. If you have to look at it, the kind of processes that we are seeing about them is something that shows a lot of secrecy. We need to see openness in terms of acquisition of the bank. If we have to acquire it, we need to see openness in terms of corporate governance of the bank, especially from the regulators. So for me, I think that is what we should be looking at. we need to see openness because, like I said, the bank is not as bad as it was before. So it's a bank that also we must not forget that a lot of businesses also depend on that bank for survivals. And once business depend on a bank for survival, that means a lot of people also staffs are being paid. A lot of Nigerians work for that bank. So for me, I think the openness and the competitive nature of it should be for the best interest of Nigeria, especially when taxpayers' monies are involved. We shouldn't go the route of different type of acquisition that we have seen thus far. We must make this professionally. We must make it open. We must see due diligence, especially from the regulators and those that are supposed to purchase the bank, if at all it gets on for sale.
Let me quickly sneak this in. I know you've heard the rumors, Mukhtar. So what do you make of the rumors concerning Polaris Bank?
Not good for our economy, Tulu, if that rumor is true. For a bank that we have invested almost a trillion naira to be sold for peanuts, I don't think it's good for our economy. For $40 billion, 40 billion naira, no, that's not good. And then when you look at who are behind those that are coming to acquire the bank, they have no financial experience. They have no financial, they've not been tested. They have no financial experience. I don't think it will be good. I think that means that everything that they've tried to achieve through the intervention by AMCON, it's more or less. I don't know the word.
I see you're struggling for the words. Yes. So I can see you're struggling for the words. And as I said, and I'll emphasize again, it is just rumors right now, but they are very strong rumors in the financial sectors that there is a potential for Polaris to be sold. We will be following the story very closely, and whatever happens, we'll also be touching base with you. Mukhtar Mohammed, thank you very much.
It's a pleasure to look. Have a great day.
You too. And while it may be a rumor right now, oftentimes they say there is no smoke without fire. So we'll be following that very closely because there are many people who are quite invested in this. AMCON has a number of companies which taxpayers pay for to save. And if something is happening with Polaris, the taxpayers whose money has gone into that bank deserve to know the truth. You're watching Business Edge. Our next conversation is for the millions of Africans who have or are considering taking a loan from loan apps now available across the spectrum. All is not as it seems. We'll tell you more after the break.